All right, friends, in studio with us, we have, as always, the ever debonair, but on casual day today, Mr. Brian Johnson of Valley Mortgage. So good morning, Brian.
Good morning, Eric.
You left the house today, and usually you're always in a suit, and you are now in a polo and a sweater.
It's casual today.
Yeah, how you feeling?
A little nervous.
What did your wife have to say as you walked out of the house?
She said, this is the most casual I've seen you in a long time. So.
Yeah. So for those of you that don't know, Brian Johnson goes to sleep in a suit. It's silk. It's wonderful. Anyways, I'm a little weird today. It feels good, BJ. What we're going to talk about is something that I think everybody out there wants to know. Everybody out there wants to know what their home is worth. But that's always a relative term because we need to know about the payment instead. So let's dissect that, Brian, because you had made mention to me that some things are happening with interest rates. For the listening audience just tuning in, what is happening with interest rates and why is that important to us?
Yeah, there's a lot of press about the Fed raised interest rates this past week or 2 weeks ago now, I think. And what that does is it has an effect long-term on long-term rates, but eventually long-term rates will catch up to that. So actually we saw rates stay pretty flat because that was pretty much priced into the market for the last few weeks. It was speculated that Fed was going to raise rates by a quarter. So they did. I think rates will stay pretty low still. We're still below 4% for long-term rates.
Which is way low.
It is. Historically speaking, it's very low. So I think things are still going to be affordable for people. If we get into the spring, I think interest rates will start to rise a little bit. We might see a 0.25% increase or so.
So you think that interest rates come spring, if it's a conventional loan, will be at or above 4%?
I do think that, yep.
Okay.
And it sounds like the Fed might raise rates again in either March or they could delay it to June or September, depending on some economic figures. So.
And so interest rates are always gonna change things. If I were to give a layman's term to somebody who's trying to understand interest rates, how much does an interest rate affect their payment? Because maybe today I can afford a house that's $300,000, but with the change in interest rates, I can't. So help us understand how all that is broken down.
Sure. Well, it really depends on the loan amount, of course. But if it's a $200,000 loan and your rate goes up by a quarter, you might be talking about $30 to $50 a month, depending on the loan amount again. So.
$30 to $50 a month doesn't sound like a lot of cash. I mean, if you can afford a $200,000 home at least, but over the life of a loan, how much is that?
That adds up quite a bit. I mean, that could be $30,000 over 30 years. So.
Yeah, I want to check your math on that, but I don't think you're far off. Again, those of you just tuning in, Brian Johnson of Valley Mortgage, and we're talking about the impact of interest rates going up. What do you think the impact is going to be as the Fed has raised interest rates, but that doesn't mean anything for us yet, correct?
Correct. Things are still staying pretty low, pretty flat. So,
but come spring, with interest rates that have gone up, you said for a $200,000 loan, a raise of 0.25% means $30 to $50 a month.
It could be, yep.
Okay, and so over the life of the loan, that could be a whole lot of money.
Yep.
What's going to change in our market because of that? Are we going to see less buyers able to qualify?
I don't think so. I think we're going to have a busy year, a busy spring too, because there might be a lot of new construction coming in. You have long-term locks that you'll be able to lock your interest rate in for, up to 9 months or a year. So if you get in now and start that process, I think you'll still be able to get a great rate and a great payment.
Again, if $30 to $50 a month doesn't break somebody's bank, then they're going to be sitting just fine. But what about the idea, because there's this sexy thought of people getting involved in, well, maybe lending isn't sexy for you, but I find it to be really wonderful. What about the idea of ARMs, adjustable rate mortgages?
Sure.
If I came to you, Brian, and said, I'm really interested in buying a house and I want to consider an ARM, what would you tell me?
We would definitely look at that. If you've got good credit and you've got some money down, that is going to be a good option. I think we will see some of those loan programs coming back into the market and more people doing those. So,
but isn't that how we got into the pickle nationally of so many people being backwards and upside down on their mortgages?
I think that's a common misconception.
Okay.
Those types of loans are still very safe. They're a fixed rate loan for a period of either 3 years, 5 years, 7 years, or even 10 years. And most people only live in their homes for 7 years on average still. And that might even be less, I think. But
well, truth be told, and because I've studied that, it used to be 7. And then as we saw the market flatten on a national sense, that number crept up to 9 years on average that people are staying in their home. And it's always a bit relative, right? Like Brian, you're a younger guy, and so you moved a couple of years ago, right?
Right.
How long have your grandparents been in their house?
Forever.
Right. So you see, it's the difference of younger generations and older generations, and that's how we, of course, come up with the average.
Sure.
But
Sure.
you're right though. If we're talking adjustable rate mortgages, if it locks in for 3, 5, 7, or 10 years, and if you're going to move before that, is there much risk with an adjustable rate mortgage compared to a fixed mortgage?
Well, no, really not. That'll actually save you money over that period because typically the rates are lower on those programs.
I think people need to talk to you, Brian, find out how they can measure the best option. We certainly aren't saying that do an adjustable rate mortgage or do a fixed mortgage. You need to talk and wrestle and figure out what's going to be best for you. So they should talk with you, and how can they do that?
Sure. Reach us at 701-461-8450 or visit us online at valleymortgageinc.com.
Brian Johnson, you have sponsored today's show. You're always a great friend in the industry, and we really appreciate you. So those of you out there, Valley Mortgage gets 2 thumbs up from Erik Hatch. Hey, in the meantime, we're going to head to break, but go to livefargomoorhead.com and find out what your home is worth. This is Real Estate Radio with Erik Hatch.